Hey everybody, Chuck Barone here. Friday, March the 3rd, 2023. Let's wrap up this crazy week we had here. Eventful week. We learned a lot this week. It was a lot of data coming our way, a lot of market moving stuff. But before we get into the show today, as always, I want to welcome everybody to the show. Thank you for your support. What you guys do every day, just coming on and watching these videos keeps us going. We appreciate you guys. Markets today. Well, stock market had a nice little rally today, didn't it? Bond market selling off, yields coming down, stocks rally. Honestly, I think this market just really has a lot of cash sitting on the sidelines. Billions of dollars being pulled out of equity funds. Another record last month being pulled out of equity funds. So the fact that, some money comes back in and stocks move, not a surprise. But there's no real compelling reason for stocks to rally right now in the face of, this inflation issue, rates, and uncertainty. Bond market today, bonds selling off, bonds buying today. Bond market, I guess they decided we're getting closer to the top of these rates. So people buying bonds today, yields falling. The 10-year, 3.96%, down 11 basis points. Yesterday I was having a conniption at 407, thinking, okay, there goes mortgage rates. It's all over. Now the market giving a little back. Hopefully mortgage rates can get to a place where, some people can afford to buy houses. Mortgage rates closely linked to this 10-year number. So maybe we catch a break for mortgages. And 10-year still elevated, though, 3.96%. The 2-year coming down only 4 basis points at 4.86%. So now the inversion is now 90 basis points. So it keeps creeping closer to that 100. I think the all-time record is 114 basis point inversion. So we'll see where it goes. They keep saying, and the data I've read and the way the market reads this inversion is that it's an indicator of a recession. It's not always 100% accurate as an indicator. As a lagging indicator, though, every recession since 1950 has been preceded by this inversion. And the record going back to that 1950 shows the steeper the inversion, of course, the steeper the recession. So this is showing us that when the recession does come, it's going to be a painful one. Dollar today, dollar falls, was up back over 105 yesterday, now coming back down 104.53, which the dollar is still holding steady, but the action in dollar today, good for metals, good for gold and silver. Gold rallying $20 an ounce. Wow, $18.56. Silver up 36 cents, $21.26. Like the stock market, I really feel like there's a lot of money waiting to buy precious metals. They're looking for the signal. The dollar is what they're watching. So keep your eyes on this dollar, guys. As the dollar comes down, we're going to see gold and silver going up. Oil today up again, man. Oil rallying a little bit. $79.68 for a barrel of West Texas Intermediate, up $1.52 today. We're getting to the top of that trough between 75 and 80. 79.68, we're getting close. We'll see if oil has enough strength now to break through that resistance at 80, or if it hits that resistance and comes back down. Again, I haven't seen a real compelling reason for oil to be rising in a real meaningful way. So I think that it's likely it hits that number and comes back. Bitcoin, not a great day today for Bitcoin, down $1,244. More messy news in the crypto markets. Another crypto lender having issues. It's just, there's so much uncertainty in that market, guys. Be very cautious. $1,244 loss today for Bitcoin, 22,291. Still a decent number coming off that low of around 16,000, but still less than a third of its high. Market stuff today, not a lot to talk about. It's a Friday. It's been such a busy week. We learned so much this week, but some stuff to look forward to. ISM comes out today. This is a gauge that measures kind of the service sector of the economy, coming in at 55.1 from 55.2. They were expecting it to be 55.4. They were expecting a small gain. Really a nothing burger here, though. Anything over 50 shows growth. 55 showing growth in the service industry. I don't know if it's just growth or charging more. I guess that's how they measure growth, right? So ISM says service sector's holding strong. This was a sad one. 50% of women, 40% of men between the ages of 55 and 66 have $0 put away for their retirement. Half the public has nothing put away for retirement. So one of two things, now what that tells me is people are going to retire poorer or they're not going to retire at all. It's really sad. And this is the handiwork of our corporate overlords. They don't want to pay pensions. Anything that benefits the working guys, no good. So they don't want to pay pensions. Now, as a result, putting people in 401ks and trusting them to do their own saving, we know how that works in this country. You're going to have half the population not retiring likely because they can't afford to. People are going to work until they can't anymore, which is all part of the master plan from our corporate overlords. What do we say? They want everybody working forever, and they want you working to do just one thing, man, to make payments to them, okay? They don't... the world's going to wake up to this someday. We've been fetishizing, these ultra-rich, making it like somehow they're so special and wonderful, and they really care about, the working people and the people that work for them. And anybody with a rational mind knows that's bullshit, okay? The corporation exists for one thing, to make profit for the shareholders. We've seen with trillions of dollars of stock buybacks, that's all they aim to do. Working people, the jury's in, guys. Working people get screwed in this country, and will continue to until we put aside our silliness and start getting serious about stuff that really affects people. Next week, we're going to have St. Jerome himself testifying in front of Congress. It's his semi-annual beatdown. I feel bad for I'm no fan of Jerome Powell, but I do feel bad for him because he's going to get pulverized by both sides. The Republicans are going to be going crazy because monetary policy was so loose, and look what it did, and look at this inflation, and how could they do that? And the other side, the left, is going to be saying that monetary policy is too tight, and you're punishing working people, and then, blah, blah, blah. It's going to be a riot to watch it. Of course, we'll bring you guys the highlights of it all. But I must say, I'm glad it's not me going to be sitting in that chair, because there's going to be arrows flying in every direction, only at one person. Anyway, have fun there, St. Jerome from Jekyll Island. You got your work cut out for you. A fascinating week this week, guys. We learned a lot of important stuff this week. We know inflation's sticky. We know this now, right? The numbers are not coming down the way we want. We know the job market is still super hot. We know it's costing businesses more money to hire and keep the people that are working for them, which I'm not opposed to. It's just the way they do it. Instead of the boss taking a haircut on his $50 million a year, and like he can't get by on 45, they pass the costs along to us, and they make everything super painful. A guy can't make $10 an hour or $12 an hour. Everybody freaks out how that's going to hurt the job creators, our friends. But nobody blinks at the guy getting. I was reading some yo-yo got $212 million, and the company lost money. We have to kind of snap out of our stupor here, guys. These corporate guys, they're wiping out the middle class. And they're taking all of that middle class and transferring those assets, that wealth, to themselves. The poor, they'd be working the poor if they could too, There's just nothing to take from them. So what they have to do with them is slave them, make them work harder for the same. And that's the same thing now, the destination they have for all of us, guys. Debt, not debt slaves, but payment slaves. Working to make payments. A horrifying future. The working people of the country, I don't want to sound like Charlie the friggin' commie here, okay? Because it's not like that at all. I think if you can make money, you should. I'm not opposed to wealth at all. I'm just opposed to it when you use that wealth to tilt the playing field and rewrite the rules so that the guy underneath you has no chance of getting up a rung, and you have a clear pathway to numbers that are just stupid. Stupid. I was reading today Nevada, our wonderful job creators. So Tesla has a big factory up north in Nevada, big gigafactory, and now they want to build another one up there. And to build the factory, the state had to give them $337 million in tax abatements for Tesla to agree to build the plant here. Sounds like the state is the job creators, guys. Okay? Not Tesla. They got a 10-year exemption from payroll taxes. You got to love this stuff, man. If it wasn't just ridiculous, it wasn't crazy, it would be funny. But it's not funny because you and I, working people, we get the brunt of it, man. It sucks. But anyway, the weekend's here. It's going to be a really good one. It's starting to warm up here in Vegas finally. 60s this weekend, high 60s. So we're going to get out and have a nice weekend, get away from this market and all this crazy, because we know next week's going to bring a lot more to us. We got Powell, we got all kind of interesting stuff happening. We'll be here to bring it all to you. Have a great weekend, every single one of you guys. Enjoy your time with your family and your friends. Relax. We'll be back at it again on Monday. Until then, guys, take care. Thanks.